Hello, everyone, and welcome back to the Payments Podbyte. Today, I'm joined by Talha, our sales manager in Pakistan. So, Talha, today we're here to discuss how FIs in South Asia can better serve their customers. Financial inclusion is one of the biggest challenges that South Asia faces, with an estimated 23% of adults in Pakistan being unbanked or underbanked, and India having the second largest unbanked population in the world. Why do you think that is?
Hey Declan, thanks for having me in this call. So basically, your question is about financial inclusion, and a lot of people think that the lack of digitization is behind this. However, as we can see, new technologies and services are being deployed in across Pakistan in the past few years, such as tap and pay, QR, wallet apps by emerging fintechs like MEA Pay, Sada Pay, and some other as well. And of course, the implementation of 5G in Southeast Asia. Local governments are also implementing some digital initiatives like Digital Pakistan, as we all know, in 2019. So you would think that this would boost financial inclusion in the region. I guess no, but these technologies and initiatives have, mainly benefited those who are actually financially literate. So, and you might know that there are a large proportions population across the region that live in rural areas, which don't always have the access to the internet and are actually too remote for bank branches to be located. So they can't actually access or utilize many of the services that banks offer. So I don't think so that the digitization is actually related to financial inclusion.
Okay, so it sounds like although digital banking services are helping those that are more tech savvy, they are not necessarily inclusive of everyone. What are the reasons behind this?
Alongside the issues I previously mentioned, and such as large populations of region in rural areas, which don't always have the access to the internet and are too remote for the bank branches to be located, there are several other issues at play too, like large proportions of people in these countries have not had a good education and in how to manage their finances, and this has led to a general lack of trust in the financial institutions. There are also some religion-based issues in this part of the world that are affecting the adoption of the banking services. And we all know this is because Sharia compliant and Islamic banks came into operation to fulfill the gap. Apart from these, there are some non-voluntary reasons as well, like the cost of services in this region is quite high for the lower income people, and also the lack of training for using some banking services. That's, I think.
So, how can FIs in the region ensure they are offering the consumers suffering from these issues an opportunity to join the financial system?
There are a few different ways in which financial institutions can be helping these consumers, as previously mentioned. Branch banking is not the solution to any of these issues we have spoken about. However, deploying agents across the region may help to increase the reach of the banks in the rural and remote areas where branches and ATMs could not be a solution. So, offering alternate payment and banking services like maybe USSD will also help drive financial inclusion. And we have seen some players started offering this service in Pakistan from the past few years, and they're quite successful up till now. So consumers can perform services like funds transfer, balance inquiry, mini statements, bill payments using their mobile phones, and by just dialing just a few numbers from the non-smart mobile phone. That is like maybe star 123 hash and following some keywords as well. So, however, for utilizing these services, of course, consumers can also be more educated on the financial services available to them in general through greater marketing efforts from the financial institutions, from the agents, and some colleagues as well.
Okay, so it sounds like FIs in the region need to strike a balance in their digital and more traditional services to cater to both the financially literate and non-literate. How can they do this?
From where I see, legacy platforms often struggle to provide a mix of services. That is both the more recent digital services and the traditional ones, without the use of complex add-ons and integrations. Which cost a lot of time and money to implement. Eventually, rising the operational cost and thus minimizing the profits of the financial institutions. Therefore, banks should be flexibly adjust their services and products to deliver their customers the best experience and services possible, which is extremely difficult to achieve with legacy platforms because as any system changes, any requirement arises, customizations needs to go through their technology vendors, and we all know the usual process for such changes through the vendors. So more modern platforms are more flexible, allowing the financial institutions to customize their systems independently without their vendor involvement, and also customize their platforms to provide their customer bases with several services they need regardless of their life situation. So it's quite important.
Okay. Well, thank you for joining me today, Talha. You raised some really interesting points on how FIs in South Asia can really better serve their customers. For all of our listeners, tune in as usual. Thank you, and we'll see you in the next podcast.